Welcome to Energy Vista, a podcast on energy issues, personal and professional trajectories. This is where we make experts great again and where we contribute actively to the public debate and policy making around commodities, the geopolitics of energy, and trade. Welcome to Energy Vista. I'm your host, Leslie Palti-Guzman, and time for a new Energy Vista episode. It's October 17, 2025, and today I'm exchanging with Michal Meidan, Director Energy at the China Energy Program at the Oxford Institute for Energy. Michal is an expert on China's energy system, investments, and trade. She testified in April again at the US Congress on China's domestic energy challenges and its growing influence over international energy markets. And we'll get to some of this in today's conversation. But first, I wanted to highlight something I've been focusing on, which is, it seems that today it's all about China, whether we talk about military power, industrial capacity, technology, geopolitics, of course, trade, and energy. And those domains seems to be increasingly intertwined. And look at shipping, like the shipping industry, for example. Washington right now is investigating Beijing unfair practices in shipbuilding and maritime logistics. And both countries are fighting this over, it's part of their geoeconomic war, basically. And just this week, as the trade war is ongoing, we've noticed that China has sanctioned the South Korean shipping company Hanwha for helping the US to try to rebuild its shipping sector. And all this is basically also interlinked with the commodity sector because the US is trying to rebuild its shipping industry, including for LNG tankers, for example, and really needs South Korean help because the US over the decades has lost its know-how. And so, allies like South Korea are going to be under pressure to decide, in the next few days, few months, like what to do with the sanctions, helping the US, continuing this alliance. The US will have to also show strategic patience as it's rebuilt some of its supply chain. So all this for me really means that we're in for a couple of decades right now. The US is really showing willingness to rebuild its supply chain, dominate AI, realizing that China has taken control over many of the, with whether it's rare earth metals, but also able to control some of the commodities like LNG that we're going to discuss. So hi, Michal.
Hi,
Leslie. So great to see you again on this podcast because actually I realized that we discussed 5 years ago. It seems that time is flying too fast. At the time, we discussed the Belt and Road Initiative, the China pledge on climate neutrality. But today we're going to focus more on gas, LNG, geopolitics. We're going to discuss even the power of Siberia pipeline, the trade war between the US and China. So, looking at this year, Chinese gas demand and especially LNG imports doesn't really seem to be on a linear growth. Earlier this year, for a couple of months, actually, imports were dropping. And for me, it might be a bit worrying for, all this glut of LNG exports that we're building. For many years, China seemed to be the El Dorado, right? Like this ever-growing market. Now we hear all about AI, and this will absorb, a lot of the gas. But so where do we stand right now for Chinese gas demand? How do you see the outlook? And what's the role right now in China?
It's a great question to start with, although it's a big question. And you're right, it's interesting that China's gas demand this year is flat. If we're looking at overall gas demand, sort of year on year, it was actually negative in the first half of the year, and now it's starting to pick up and be flat. A number of reasons, actually. And we have to bear in mind, first of all, that the biggest consumer of gas in China is industry, not power, which also relates to our conversation on AI. But industrial activity has been relatively weak in a lot of the traditional gas consuming industries that are related to the property sector. There's a massive slowdown in real estate in China. So things like cement and glass and those traditional industries are suffering a slowdown. The saving grace for gas consumption in industry over the past couple of years has actually been what the government calls the three new industries. So EVs, batteries, solar panels, those have been rising very strongly, but even there's a lot of overcapacity. The Chinese are talking about involution. They call it involution, not overcapacity. But still, industrial activity has been slower this year. So that's taken a toll on gas demand. We had a warm winter. So again, that kind of took the edge off the first few months. Gas and power is not as strong as it was last year because there's a lot of coal and renewables. And the big story for 2024 was gas and transport, where we had a lot of fuel switching from diesel to LNG. That slowed down as well, in part because of the price differentials. So you've got a weaker demand outlook. And then when you look at the supply side of the story, the reason that LNG has been so weak, A, is prices, B, tariffs on US LNG. So there is a kind of desire to move, I guess, if you look at the pecking order of the lowest cost supplies, domestic production is rising very strongly. Pipeline flows from Power of Siberia 1 are now reaching their capacity. So all of that has meant that with a weaker demand growth, well, flat demand growth, you've had other supplies to meet that demand.
Yeah.
LNG has been phased out and resold essentially to Europe.
Yeah. So China basically on the supply side has many options, right? Different fuels, whether it's coal or energy, in the mix with renewable increasingly higher. And its domestic production is now competing with LNG imports, basically. So, like, correct me if I'm wrong, but the region Sichuan is where we have the shale gas, and used to be known for its cuisine, but now increasingly more for shale gas. But is it realistic to think that Chinese production from this basin and other, like domestic production, will keep growing like this, like it has been ramping up?
It's sort of been the gift that keeps on giving and the kind of ongoing surprise. Um, so thankfully, Sichuan cooking is still very good and still very popular. But I think what's been really interesting is how there's been a focus on the upstream, both in oil and gas. And you looked at it. So in 2019, the government came out with like a 7-year action plan to keep production going. And you looked at it and you thought, okay, the government says, but there's only so much that you can do depending on the geology. But kind of, we're almost at the end of that 7-year action plan, and we've seen Chinese domestic production grow at 7-8% every year. Part of that is shale, part of that is tight gas. A big part of that is actually offshore, conventional, but offshore in the kind of Bohai Bay. And the reason that it's been successful is not just because the government has said, but the government has given tax breaks and incentives to produce the harder sort of patches. The reality is that we don't have a huge amount of insight into the geology. And so it's hard to tell how long this can keep going. But from what we're seeing, there are very few reasons for the growth to stop. And if you look at CNPC, which is the biggest Chinese oil company, if you look at their forecasts, they see production, which is now in the 250 BCM range, going and peaking at 300 or 320 in the 2030s. So we've still got sort of almost 10, just under 10 BCM average annual growth just in production every year.
Mhm. So China seems to send signals that they could become increasingly more self-reliant for natural gas. That their demand may peak at one point, beyond 2030 plus. Um, and at the same time, they just signed this Power of Siberia pipeline, deal with Russia. So, do you think it's more a negotiation ploy as China and the US still negotiate their trade deal, many other issues? There is a war in Ukraine, this kind of um, reconfiguration of trade flows and alliances. And, Russia and China, two large landmass countries, actually have this advantage of they can trade together, building pipelines rather than going through the sea. Like, so how do you see this pipeline announcement recently? Do you think it's a bluff, or do you think it's going to materialize at one point?
Yeah, it's been fascinating. Like the September geopolitics and realignments in energy um, have been really fascinating. I think first of all, it's important to keep in mind 60% of China's gas comes from domestic production. China is what is it, the fifth largest gas producer in the world. So it
Yeah, I
does.
think now it's almost like the size of the whole African continent, like what the whole African continent is producing. Yeah,
So
huge.
it's not a small producer, but obviously demand is so strong and rising so strongly. I think the demand side is really important. We talk a lot about supply, and we'll talk about it in
Mm.
a second. But the kind of variation in forecasts of where China's gas demand is going to peak range from 550 BCM. So demand today or 2024 was 400 and just under 430 BCM. The forecasts go from 550, sort of peaking at around 550 in the mid 2030s, to some analysts that say it's going to peak closer to 700 towards the 2040s. That's a massive variation in your demand outlook, which obviously has, on one hand, a lot of potential, but on the other hand, just creates a lot of uncertainty. So that, I think, is also important to bear in mind. The power of Siberia, too, from what we know, right? The only things we know came from the Russian side, from Gazprom CEO Alexei Miller, who said that there is a mutually binding agreement to do who knows what, right? It just sounds like there's an agreement to keep talking.
It seems the best opportunity for Gazprom to avoid bankruptcy too.
It's a good way, right, to get financing.
Yeah.
I think it is significant in that it was also announced by Putin, or sort of there were statements around Power of Siberia too. So we kind of know that there's a desire to keep negotiating it. We know that the route via Mongolia that was contested is the likely one, and we know that they're planning to price it in ruble and yuan rather than dollars or euros. We don't know the pricing structure, we don't know the terms of flexibility, and we don't know the start date. So, in that respect, the project has always been on the table, right? It's been negotiated for the past decade. Um, we have it in our balances. To be fair, we have it starting up in the mid 2030s. I know lots of other analysts that are assuming that it happens in the 2030s. So, in that respect, there's nothing new, but the announcement is significant because at least up until now, the Chinese, they had a number of reservations. One was price, and again, we don't know what the price is. The second was that if they do Power of Siberia 2, when you add Power of Siberia 1, and right, they announced a few expansions of existing pipelines or contracted pipelines. When you add all of the existing and potential supplies, both pipeline and LNG, Russia could account for almost 40% of China's imports, which is a lot. And the Chinese have been really reluctant to be overly reliant on any one partner. We see it in oil, we've seen it in gas. So that's the first thing, that sort of, does this mean that China's willing to tie itself more closely to Russia? The second thing that was interesting was that the Chinese were holding off on some of these negotiations, in part because of European concerns about support for Russia following the Russian invasion of Ukraine. Now, obviously, China has been supportive of Russia, but they've never gone as far as saying, we're not just siding with Russia, we're financing Russia. And in August, September, what they did was take cargoes of sanctioned Arctic LNG 2, LNG, and announce, well, not announce, but supposedly
That
announce.
was interesting because it happened at the same time Putin was in Alaska, right?
Exactly. It was sort of
Yeah.
after Putin. So it's sort of saying to the West, you know what? We hear that you have these sanctions, but we don't really believe you're going to enforce them. And we're happy to help finance Russia, which is a pretty strong geopolitical statement. Now, does it change market balances? I think not. I think it doesn't move the needle on the projected supply and demand of China in the future, but it does give China optionality. And I think that's the interesting thing, that it could have a bunch of supplies of gas, and again, we don't know how much, that's priced at a sort of X market price in different commodities and just gives a lot of optionality because
Hmm.
I think there's a real potential that the Chinese gas market is oversupplied in 10
Yeah.
years.
And in this case, I think it would put China in the best position to become an exporter of LNG, actually.
Exactly.
And in this case, yeah,
Yeah,
control more the market. Mm.
it's already retrading a lot of
Right.
LNG. And I think it is now some caveats because the domestic system and prices and flexibility is not perfect, but they kind of have 10 years to get there.
Yeah.
But the point is that they have optionality on a number of fronts. And they also have, and I think you're right on your point about leverage, maybe it's with the US negotiations, but also, they can come to their existing partners now and say, you know what, we're going to have all this gas from Russia that's going to be priced at $5 to $6 per MMBTU. Give us a better price on our LNG.
Yeah.
Let's
What was interesting is that they have already renegotiated a contract with Australia before the announcement of the power of Siberia. And it was at the time where everybody was like talking about the drop of Chinese gas demand. And for me, like all those announcements about weak Chinese demand actually um, fits a purpose for China because it gives them the upper hand potentially in negotiations to renegotiate contracts and to announce to the world also this big giant pipeline of 50 BCM a year. For me, it's a strategic communication also to maybe paralyze investments in other jurisdictions. So it didn't work for the US so far because we've seen since the announcement of the Power of Siberia pipeline additional FIDs taken for US LNG export projects. But it could, delay some projects in Mozambique. The outlook also for Alaska LNG. I mean, the world is not going to be able to absorb in 10 years from now or more such a big amount of supply. The US is doubling its liquefaction capacity within, by the end of the decade already. So huge amount of gas coming into the market.
And I think the upside, even from that cheap gas, is relatively limited. Yes, China could consume more gas at lower prices. Doesn't matter where from. But there's only so much more gas that it will consume, because the domestic pricing mechanism is set by the government. So there's not full pass through of low costs because they do worry about reliance on imported gas, but also because they've got coal and renewables. So when you think about the cost of gas, you have to think about the cost of alternative fuels in China, which are falling rapidly. Some switching happens now because you can use more gas and power, or you can have high utilization rates on some industrial applications. But in 5 years' time, is the government going to invest in infrastructure to have more gas, or is it going to invest in more infrastructure for electrification, which relies on coal and renewables, which are domestic sources, and more secure? So I think there is upside, and I think this year is a bit of an outlier with flat gas demand. I think China does go back to growing 15 to even 20 BCM a year.
Mm-hmm. Yeah.
But you have some market projections that talk about much more than that.
Yeah. So in this context, the Chinese market for US LNG was like below 5 million tons last year. It's not a big market. It was the highest in 2021, almost 10 million tons, just after the two countries, agreed to find a trade agreement. And it never, recovered to those levels. Now we're at zero so far this year, almost. Since February, China has not imported any single US LNG cargo. Trade discussions are ongoing. Do you think both countries could save the face and agree on for China to import again US LNG? How do you see it? How do you see it?
I think they could make announcements about additional imports, but the reality is that until the tariffs are lifted, there's no big incentive to actually bring those flows to China. Now, let's see where tariffs go, right? We have now a potential threat of 100% tariffs imposed by the US on China in November. If China reciprocates, then there's no chance for LNG. as long as tariffs are 15%, there's a scenario in which low cost, sort of cheap US gas that is actually competitive in the Chinese system. But so, first of all, question of what happens with tariffs. It's fine to say, yes, on paper, we're going to buy more. The other reality, of course, is that US contracts are very flexible. So the Chinese can sign agreements and then resell them. There is a bit of a risk in that strategy because if the market is globally oversupplied, then they could be stuck with some of those cargoes. I think overall there's relatively limited appetite for additional LNG investments. I think if there is a trade deal or deliverables from a potential meeting between Trump and Xi later this month, it would probably be on the ag stuff, on soybeans rather than LNG. It's a nice face-saving way, but I think the reality is that it's going to be hard for US LNG with the current tariffs and maybe higher tariffs to go into the Chinese market.
Mm-hmm. I was discussing with somebody who knows a lot about shipping, and he pointed to the fact that China is not owning or building much vessels in general that are LNG propelled. And one of the reasons could be that they don't want to open this market to the US, since China now is a big ship builder, not yet dominant on the LNG tanker side, but many other segments of the shipping industry. Everybody is looking at alternative fuels to propel vessels in general. And LNG is the one that is the commercially available right now, proven technology. Others are working on the future of methanol and ammonia and other things like that. But like right now, LNG is the one that could be, this kind of alternative fuel. And it seems that China has not really done anything much regarding this. Do you see it as a way to actually compete with the US and not give the US too much, market for its LNG, basically?
I think there might be an element of that, but I think it's also relates to two other factors. One, I mean, you remember the IMO discussions? Like,
Yeah.
that's all we were talking about. Like, what would happen when IMO would hit? But even then, there was a bit of skepticism whether LNG would be the fuel of choice or whether you'd have scrubbers installed and, desulfurization of fuel oil. And I think that was still a bit of a hesitation in the industry on whether you actually invest in LNG. So I think it's a little bit of a manifestation of that. But also, China has a lot of renewable capacity that is, well, curtailed, or it's excess renewable capacity. They're doing a lot of green methanol because they have a lot of renewables that can't access the grid for a variety of reasons. So they're actually going to green methanol and other solutions that they're trying to develop. So I think it's a combination of, I guess, the opportunities and then maybe also not seeding ground. But also remember, they haven't been the leaders in LNG technologies on anything. Like they haven't been the leaders in gas plants, which has been another reason why gas. We talk about really big numbers, but gas in the Chinese energy mix is 10%. In the power sector, it's 6% of installed capacity. Because when you think of coal and renewables that are big industries in China, either on the production side or on the equipment side, then gas loses on all counts.
Yeah, so we cannot leave this discussion without talking about AI. And you mentioned it already a little bit. For electricity, gas is not really, the place where, for increased reliance on electricity to power EVs or to power AI, like China is looking at coal and renewable, basically the combination. So it's very different from other regions right now where, in the US, everybody talks about gas turbines, right? And new power plants and additional pipelines and transmission lines that we need to bring this electricity or co-locate because we don't have enough transmission line and so on. So how do you see this kind of, divergence between markets? Europe also apparently is going to really, like right now, the electricity in Europe isn't really growing, but will eventually grow based on AI and projections. I read as much as 70% increase by 2030. It seems a lot, but we'll see. So all those data centers will need to be powered by something. Like, can you tell us a little bit how you see China positioning itself in this race?
I think to a certain degree, the debates are similar, right? It's the electricity demand and how do you ensure electricity demand? Where do you locate the industries? Do you have the physical infrastructure? What are the implications for, the cost of electricity for consumers? Those are all very similar debates, except that, as you pointed out, in China, the electricity system is all about coal, renewables, and to a much lesser
Nuclear. Yeah.
degree, gas.
Mm. Not
There's
nuclear.
nuclear,
Yeah.
hydropower.
Yeah.
So the growth and China power demand power is growing. Power demand is growing at around roughly in line with GDP. And actually, for the 5 years up until now, it was growing faster than GDP because of broader electrification, electric vehicle penetration, but also AI data centers. A bit like many other parts of the world, it's also very local, right? It's very regional. Um, there are plans to sort of build data center clusters that are linked to the renewable bases and clusters in kind of northwestern China, in the big renewable bases. Not all of that is going to be possible and realistic because some data centers actually need to be close to the demand centers and the consumer centers. So for some of them actually along the coastal provinces where gas is a big part of the power system, we could see sort of more demand from gas. And I think especially if we get a glut of LNG and sort of lower cost gas, and that can feed into that electricity demand. But overall, I think it's sort of going to be a marginal story for gas. AI is going to be big in China, and we go to all those questions, right, of A, how do you feed demand for AI, but B, what are the implications of AI for energy efficiency and better use of electricity? That is all relevant for China too, and the kind of locational questions. It's just not the big gas story that it is, or at least the gas players are
Yeah.
saying that it is in the West.
Right. Yeah. So I opened my remarks at the beginning about talking about shipping because I think it's an illustration of, a lot of the different dynamics we see nowadays, on the industry, the AI, with metal and controlling and securing the supply chain. So over the years, the West and especially the US has ceded a lot of market share and basically almost the whole, shipbuilding to Japan, South Korea, and more recently China. And I think the US has been realizing for the recent years that it's a big vulnerability because there are um, some kind of transfer between also the military and the commercial side of shipping. And if you lose all your know-how and expertise on building ships for commercial, it's also translating into the military side. So now the US needs to rebuild alliances. South Korea is going to be one. And, it's part also of the trade deal between South Korea and China. But we just saw that China is now pressuring South Korea by sanctioning Hanwha, one of the largest shipbuilder in Korea. So, I feel on the trade side and the geoeconomics is going to last for years, right? Like we're going to see tit for tat. And so it's a never, I don't see the end of those kind of rivalries.
No, I agree. And I think beyond that, the sort of implications of that tit for tat is going to take not a lot of time, but every day or every week, we're going to see the unintended consequences or how these things unravel because they have such knock on effects on everything, right? So the kind of having ceded ground to China, it was maybe in a different era when we thought the globalization was a great thing, or when everybody commonly assumed the globalization was a good thing. The fact that a lot of manufacturing moved to China, part of it was because some of these things were energy intensive, inefficient, and polluting, especially when you think about some of the critical mineral processing. We were very happy in the West to outsource that to China to see cost reductions, scale improvements and therefore cost reductions. A lot of what China's done has enabled the energy transition with lower cost solar panels, wind turbines, electric vehicles, and batteries. When we look at it from an industrial perspective, then we've lost a lot of competence, know-how, skills. I think where China's interesting is that it's not just about we focus on state subsidies and how the government, helps companies, but they've also developed really comprehensive ecosystems that are able to build and manufacture and process innovation and efficiency gains. That just means that it's quick, it's cheap, and it's relatively efficient to produce things in China. Now, breaking that up or trying to replicate that, I think is going to be harder than people think, because China's advantages are not just state
Yeah.
subsidies or cheap electricity. It is all those ecosystems of knowledge and skills and supply chains um, that it is gradually nationalized as well. So it has sort of actors in shipping, in trading, in all of that. So it's going to be much harder to disentangle, and it's going to put a lot of countries in that position where they have to choose sides, which increases costs and complicates matters.
Yeah.
I
Yeah.
think,
I think for the US, the goal is not maybe to control the whole value chain. I think the first LNG tankers, for example, agreed with Hanwha Shipping, will be built in Korea. There will still be some transfer of technology and training for US workers, and labor is going to be so important in that regard, and increasing and trying to gradually reduce the costs. As we know, like right now in this administration, there are many contradictions in the agenda. The tariffs on steel is not going to help out necessarily. Hard policies on immigrations, visa, like for workers that potentially have those skills also. So I think there is a need for alignment between different departments in the U.S. agencies, and also many strong alliance with capable partners like Japan or South Korea, for example. But I think it's still worth trying to do it, even if it's going to take decades, just because it puts the US and the value chains that the US, even commodities, like LNG exports, potentially at a risk in time of wars, or just big crisis like we saw during COVID. Like, you want to be in control of your supply chains.
and I think beyond the control of supply chains, we want geographic diversification, right? If we've learned anything during COVID, is that redundancies and available supplies in different geographies and different sort of know-how in different geographies is a good thing. But it is a mindset shift, right? It's
Yeah.
sometimes you have to backstop or financially de-risk some of those investments, so you're not going to get the cheapest. You might, you need to move away from these kind of just-in-time supply chains to redundancies in your supply chains, and that's a different mindset. You're going to have to do industrial policy like China does. And that's a very different mindset.
Yeah.
And I agree with you, it's all useful, but I think what Europe and the US need to do is prioritize. We're not going to be able to redo all those supply chains and to reshore, friendshore, nearshore. You have to pick the strategic objectives and focus on those and then go from there. And I'm not sure we're doing that, especially with all these conflicting agendas and priorities.
Yeah. Yeah, it's only the beginning of this trying of renaissance of shipbuilding in the US and in Western Europe. So we'll see. But Michal, let's move to a question more on your personal, professional trajectories. So you recently announced a new position as an advisor at Sciences Po, where actually we both studied. I did a bachelor and master's degree, and you did a PhD there in Paris. And you are going to teach also. So teaching is going to be new for you. How do you feel about it? And are you excited about it?
Super excited, actually. It's a privilege to go back to, well, both of our alma maters.
Yeah.
Sciences Po is still, yeah, Sciences Po. And it's in, the sixth in Paris. So not a bad place to to have to be in for a few days a month. But beyond that, I think it's fascinating and it's exciting to, first of all, have to try and think through the energy system. My course is sort of dilemmas of the energy transition. So to think through the energy system, how to convey some of those issues in a balanced and impartial way to students who are going to be making their careers in energy. And then I think even more interestingly is to be challenged or confronted or hear their questions and their perspectives, and sometimes have to rethink um, the way I see things or the way I think about things, and just be, engaged with the, I guess, younger generation of energy professionals.
Yeah.
is really, really cool.
Yeah. You'll tell me if you see like some people more hopeful, realistic, pragmatic, or, environmentalist hardcore. Like you'll tell me if there is a diversity in the mix.
I think the beauty so far, I've had a few sessions with this cohort, is that they are very optimistic. I
Okay,
love
good.
that. I hope it rubs off.
Yeah, I mean the apocalyptic, doomers are the worst, I think, because it puts us in the position of inaction so much. There is pessimism. Okay, if we're doomed, let's do nothing and wait, right? And on the contrary, I think I'm a big believer in technologies to solve many of the climate issues, and I think we need great minds to understand all those complexities also between all those different fields, actually, because energy, as we know, it's a mix of finance, geopolitics, technology, all of it. So great. Well, that's amazing.
And you've done great contributions with technology and understanding. So,
Yeah, yeah. Yeah. The platform we built with, it was a mix of AI, machine learning, to anticipate flows of commodities and predictions. So it allied with some technologies like satellite imagery and AIS, like the pulse that tankers emit, and it was like a good um, a good way to touch on all those different sectors. Also, yeah, good. Well, thank you so much for joining the conversation, Michal. And we'll be in touch to see what's going on with China in the next few weeks. And Trump and Xi are supposed to meet soon.
yeah. Well, thanks for having me, and I hope it's not 5 years till we speak again.
Yes. This is Leslie Palti-Guzman. The podcast was recorded on October 17, 2025. This is Leslie saying goodbye and good luck. If you like what you hear, want to support Energy Vista, discuss sponsorship, or send feedback, contact me.